What is up? Let's get it. I know I showed this PowerPoint before. It was only like a 1 minute video, and I was just running through the slides with no sound. Just want to show it to you guys. It is free on Telegram. It's just a seven slide PowerPoint, and it's just a snapshot. It's just like a basic overview on many ways of how you can flip an account. And so, is there more than one way to flip an account? Of course, there's more than one way to flip an account, especially in trading Forex. You can either scalp for 6 to 8 hours, like what I did back then last year. You can either, what I did for that $600 account and that $250 account, the two previous accounts that I flipped, the $250, the $3,400, that was for JAFX, and then that was on full leverage, 1 to 500. And then the $692 account that went to 5,000 in 1 week, that was done the same thing, but it was with Trader's Way, and it was nothing. It had nothing to do with scalping. What I did was the month of February is by far the best month to flip an account. There is so much money being spent here, especially from the consumer side, for tax season. And for those of you that don't know about tax season, it raises, like prices are going up. You're looking at the economic activity, the growth, especially here in the United States. Everything revolves around the U.S. dollar. And so, especially with the U.S. economy booming, you're looking at tax season. Of course, the markets is going to be a lot more volatile. And that's just on the basics of the fundamentals and looking at the economic activity. And there's a lot of activity. That's why there's so much market volatility as well for the foreign exchange market. And I mean, coming down to this PowerPoint, I mean, scalping nonstop. Like the longest I ever scalped was 9 hours straight, and that was from the beginning of New York and all the way till like the first 2 hours of Tokyo. And when I talked about that book that I already have out currently, is that if you want to scalp off the first 2 hours anyways, because by the second hour of each session, you want to look for a direction so you can start stacking on the trend. And so by scalping off the 1 minute chart, I mean, that's what I learned, and that's what I was used to doing. And I never know anything about indicators. And so when I was trading before, I didn't know anything about indicators. I didn't have indicators. All I looked at was on the candlesticks going up and down. I didn't know what was support and resistance back then. And then until I used the 10-day simple moving average, and I didn't know what the moving average was used for, to be honest. Also, you know, the RSI and the MACD. By far, I like scalping off the MAC, the moving average, convergence, divergence line. The reason why I like using the MACD a little bit more is because when you have the two lines from the MACD crossing, especially like right here where it says the 9-period EMA and then the 12 and 26, how when they cross, that's letting you know that it's reversing. And so now on your MetaTrader 4 app, you don't get that. You just get that one line, and then you get the histogram. And so when the MACD goes a little like above 70, especially like when you look at the 5-minute and 15-minute chart, eventually it's got a curve. It's really slow, and it's a little bit more effective versus the RSI. And then I'll touch base on the stochastic here. I don't think I have it on here, but by far I would use the stochastic oscillator on the 1 minute, 5-minute, 15-minute scalp. And that would be the only way I would do it, because it moves so much faster than the RSI and MACD. When you identify, you know, support and resistance, the most important thing is that you want to have a clear confirmation of what is overbought and what's oversold. So that way you're not entering at the wrong time and not getting out also at the wrong time. Because when I get out, when I enter on a trade, I plan on getting out, especially on the 1 minute chart. I plan on taking profit within 5 to 7 minutes. I don't plan on taking profit, you know, in an hour. If I'm planning on taking profit within 1 hour, then that means I should be just focusing on swinging. A lot of people just say that they want to make all these massive pips, but they don't understand that they're trading off the 1 minute chart. They shouldn't be looking for more than maybe 10 pips at the most, depending on the direction of the candlesticks pushing. You could probably get lucky and catch 20 pips, but that's if the trend goes your way and you see a solid breakout. And so most of the time you go on the 1 minute chart, you should really just shoot for 3 to 6 pips. Or if you're on low spreads, which I recommend, you have to use an ECN broker that has the lowest spreads. And if you're not using an ECN, use a micro account. Good luck with that. I don't recommend anyone using a micro account and trade on 20 plus spreads and hoping to like they can just scalp off a 20 plus spread pair. I don't ever scalp on anything higher than anything higher than 10. There's no point. Anything higher than this, if the spreads are 10 and higher, I'm not wasting my time on that. And so when you're scalping, that's why I love trading the dollar yen, the USD JPY. That pair is volatile during the day and during at night because you have the US based currency in the front and you have the Japanese yen in the back. And guess what? Those two just intertwine together because you have New York sessions that's involved. You have Tokyo session that currency is involved. In London, that thing just happens to go crazy there in London as well. So it's an all around universal pair that is really sensitive to anything, especially to economics and political events. And so that's why I love trading on the dollar yen, the USD JPY pair, versus trading Euro USD. Trading the Euro dollar, you're really not getting a whole lot of volume during Tokyo. You get a lot of volume for the overlap from London to New York, and then you get a little, and then you get some kind of you get like a good volume during the first 2 hours of London, and so not a whole lot of volatility for Euro USD unless something really major happens for the ECB or if something were to happen to the dollar, and that's it. So that's why I like trading. That's why I like trading the USD JPY pair the most for scalping, because it is by far compared to the lowest spreads with the Euro USD. And like I said, you gotta have an ECN account with the lowest spreads because I would not scalp on anything that's over 10. And if you're on a 1 minute chart, you should be shooting for 3 to 6 pips, and you should be taking profit by less than 10 minutes. Less than 10 minutes, you'd be taking profit and then getting back on another trade. When you see a major breakout, especially on a 1 minute chart, and I'm not talking about news. I'm not talking about high impact news. You can flip an account trading high impact news, but that's on a whole different level. So the biggest thing is that if you do plan on to just scalp, right? Eventually you're gonna have to learn how to swing. I had to learn how to swing the hard way because I didn't want to swing. When you choose just to learn off of one strategy, if you're not versatile and you don't know which strategy to hop on when the markets are not, when you can't adapt to the markets. So you have to be an adaptable trader at all times. So very, very important to not get yourself caught in this. Let's see here. Charts on scalping, Bollinger Bands. Yeah, Bollinger Bands. I don't use the Bollinger Bands anymore. You can just scalp off the moving average and using the RSI. I mean, that's the stochastic, not the RSI. I like the stochastic a lot better. If you were to put the stochastic and RSI, compare both of them, and compare the stochastic and the RSI on the 1 minute chart, and you can see the difference of what I'm talking about. I mean, here they have the 12, 26, and 55. I don't use 3 moving averages. They have two EMAs and one SMA. Exponential moving averages and then simple moving averages. I don't use all that. I mean, obviously, what you can see here is a straight uptrend, and you can see where it crossed here. And when you see two moving averages, like if you're using two moving averages and they do a big cross, especially on the 4 hour, not on the 1 hour. I'm talking about the 4 hour. The 4 hour, because every 4 hours you get a candle, and that structure of 4 hour candles is a lot stronger than the structure on the 1 hour candle. That's why I like the 4 hour chart a lot better for trends, price action, and also for swing trading. With the 4 hour, I mean, you can look at the daily and the weekly and get going on get going on. Someone open my door and get going on looking at how far this trend is going to stretch, right? How far is this trend going to keep going? And that's really important, because if you don't look at the future of where the trend's going to go, you end up second guessing yourself if you're swinging for that long. You don't ever want to second guess on where price is going to go. That's why price action is very important. You always want to have, especially when I do a full swing and I'm stacking 10, 20, or even 30 positions. The most positions I ever stacked was 50 positions. Not on one pair, but I'm talking about like the 6 major pairs. And when you get really good at stacking, then you can stack on 6 to 8 pairs. And so I'm not talking about focus on eight different charts, because the most basic principle to follow is whatever the dollar index is doing, then you either buy the dollar and you buy the USD pairs, the US dollar pairs in front, and then if the dollar is going down, obviously I'm going to buy gold, I'm going to buy the euro, I'm going to buy the pound, I'm going to buy the New Zealand dollar, I'm going to buy the Australian dollar. Those are the 5. Well, those are the 4 pairs, and plus the one commodity, the gold, that I'd be buying against the dollar. Then I'll be selling a USD CAD, right, the Canadian dollar, US dollar versus the Swiss franc, and the US dollar Japanese yen. And so those would be the 3 US based currency pairs I'd be selling if the dollar is dropping. So I'm focused on 8 different pairs right there, along with one commodity, which is gold. So when you get really good at stacking, and you have this, the basic principle down, then you can figure out, okay, how, like on the long term, like the daily, weekly trading, where exactly these are going to go, where these prices are going to go. I always make sure I have 3 price targets on the uptrend if it's uptrending, and then I have 3 price targets on the downtrend. A lot of people say they use Fibonacci so that they can find out where the 61.8 or the 31.8. I don't use Fibonacci. I don't talk about Fibonacci because I don't use that for any of my trading. I want to make trading as simple as possible to where someone can come in and take it to a whole new level. And so Fibonacci is great. I'm not talking down on it. I just don't use it. I don't use ABCD patterns. I don't use any of those crab patterns or cipher patterns, whatever they call it. I don't use any of that stuff. My way of trading is going to be the most simplistic trading there is. And I don't want to have a bunch of freaking indicators out there to where it just confuses the heck out of people. You can just strictly look at here on this chart on price action, uptrend, downtrend here. And if you go to this site, learntotradethemarket.com, this guy has a lot of stuff on price action. And the most important thing is to identify where the price is going. That's the most important thing. And this is based on the Euro USD, Euro to the dollar. And so when I identify a trend right away, like if you use the 10-day moving average, because that's what I use. If you use the 10-day simple moving average, and you follow the candlesticks on that moving average, especially on the uptrend or downtrend on the 4-hour chart, daily chart, weekly, and monthly, you get to see where these candles are pushing with the moving average going up and down. Like they're bouncing off the moving average, and they're riding the wave. They're riding with the moving average, not against the moving average. If you put the moving average on there, you'll get to see it. If you don't, then this is what you see, and you have to look and see where the bear candles are going if they're going down, and then you see the bull candles going up. Now, I don't use white and black candles, so red candles for me are the bearish candles, and the bull candles are the green candles for me. That's just an easier way I look at it. And this is a very important slide. Like, do not over leverage on the small account, because eventually you can get stopped out. Like people take sometimes a little bit too much on the risk side, and I can't stress it enough for those that want to flip an account. Try to go more. You can't go more than 100%, right? People say you gotta give 110% of all you got, right? You can't give 110% all you got on your account, right? If you go over 100% on your account, I guarantee you already lost. You're down to zero. You can't go -10, or you can't go -50 unless you're with Traders Way. That's a whole different subject to talk about. But that's when you end up starting. That's when you start owing money to the broker. And so I kind of think that's kind of bogus on what Traders Way was doing, but that's the way they don't care. They won't stop you out. They'll let you go down all the way to negative. I've seen it happen. It happened to me twice. And if you stack on trends, you want to stack on those two accounts, right? Back I was talking about the 250 to 3,400 and the 692 to 5,000. It was just stacking on a Sunday on Tokyo sessions on a Sunday night, and I'm looking to ride this for the whole week, and I'm stacking Sunday, Monday, Tuesday, Wednesday, and that's it. I don't stack on Thursdays or Fridays. Thursdays, you're going to get a massive pullback, massive retracements on New York sessions. We just saw a massive pullback, especially for the dollar pushing right back up. The pound pushed right back down for New York sessions. If you look at last night, right? Let's talk about last night. Last night, the Australian dollar was the one that pushed up the highest. The Australian dollar pushed up the highest. It went up over 100 pips before New York sessions hit. As soon as New York sessions hit, within the second or the third hour, I forgot which one it was, but within the second or third hour, the dollar did a massive retracement, pushing right back up to 94. The dollar index. I'm talking about the DXY. And so for those of you that don't know what the U.S. dollar index is, go look it up. I call it sometimes they call it the DXY. That's what I got on TradingView. Some brokers do list it as the U.S. dollar. And it's a pretty important currency to pay attention to. And so if you don't pay attention to the U.S. dollar index, then you should already have your own confirmations of where price is going for each pair. And so whatever, like I said, whatever rises up at night, right, can only go up so high in price or in value, right? Whatever goes up the mountain that high, gotta come back down real hard, right? You see the pound pushing right back down first, and then then the euro, and then Australia, and then the New Zealand dollar started dropping back. But the pound was the one that went up the most against the dollar during NFP, during non-farm payrolls. I'm backtracking on Friday and up until Sunday. So these are stuff that I remember in my head. And I always make sure that, okay, what happened last week? What happened on NFP? What's going to happen for Sunday, right? the goal for Sunday was I was planning on selling the dollar anyways. If you look at the weekly chart, you can see the evening star candlestick structure that's already been set up for the DXY, for the dollar index. And so I'm not going to show that to you, but if you actually look at it, you get to see what I'm talking about. And the only way I was going to keep buying the US dollar is if it broke 95 and it stayed above 95, but it didn't. And so that's why it's important to understand where prices are going. When you're stacking on trends, back to this slide, when you're stacking on trends, you have to understand that each session is different. Not each session is gonna go your way. I have a typo here, a chart here, this right here. So let's say chart, but I'll fix it later. But like I said, the 4-hour chart is the most accurate chart for swinging for the whole session. You get 2 4-hour candles. If you look at the 1 hour, every other candle on the 1 hour on an 8-hour session, you get 8 1-hour candles, and each session is about 8. Well, some sessions are 9 hours, but London's 9 hours, Tokyo is 8. Sydney, I think Sydney's 9. But if you were to look at New York is from 8 a.m. to 4 p.m. Eastern time. So that's 8 hours, right? So you get 8 1-hour candles. Every other 1-hour candle ends up being resistance or support, either bearish or bullish. Every other candle, most of the time. So that's one way of looking at it. It's just basic stuff that people are not seeing. When you just look at the simplicity side of Forex, you get to have a bigger, you get to see the clearer picture. That's what I'm saying. You get to see the clearer picture of where the central banks are manipulating price. How are they doing it? I mean, you get to see how much high they're trying to raise the value of the euro or the value of the dollar, or how much gold is going to go up, the commodities, stock exchange. I mean, you get to see everything. And so instead of making things a little bit too complicated and trying to hop in on different indicators, there's so much more ways to learn on the simple side of things, not on the, I gotta learn all these patterns before I go trade. Learning all these different patterns isn't going to help you out unless you identify the patterns for yourself. If you don't identify it for yourself, you end up losing more money, because it doesn't matter who teaches you. What matters is, can you really grasp the information down and utilize and apply the action mode behind that? I don't care if you read the book. Don't matter what you read. If you don't apply what you read, then you're not applying shit, to be honest. You ain't applying nothing. I'm just being honest. That's everything. I don't care what book you read. I don't care what you read in the paper. I don't care who told you what to read. If you ain't applying what you learning, you're not applying nothing. That's the most basic. I put out all this information out here, and someone says, well, I don't know, cool stuff is a joke because I didn't learn anything. The question is, for you to really get down to the dirt and actually figure this out, the trenches, you have to do it yourself. You have to. And let's jump into this, because I'm getting more into self-development here. Red news trading. This is another question that's been asked a lot. Red news, high impact trading. How I learned it for myself is when I lost $18,000, $17,000 on that $26,000 account, NFP. It wasn't even on NFP. A lot of people thought it was NFP. It was not on non-farm payroll. On March 3rd, Janet Yellen, Fed Chair Yellen was speaking, and the dollar was going up. The dollar, yen, USD JPY was just pushing up, and came close to 115. The moment she had her speech going, like the moment the speech clicked in, the dollar immediately dropped. Everything with the dollar fell back hard. USD JPY was the one that fell back the most. It fell more than 100 pips. That 20 standard lot was negative. It was like negative 14 or negative 15,000, whatever it was. So I took a massive hit, and I didn't know what to do. I thought it would go back up. What I learned from that day, like what I really learned from that day is that, yeah, a lot of people say you should put a stop loss. Till to this day, I don't put a stop loss. And I'll have a separate video on why I don't use a stop loss. A lot of people say it is safer to use a stop loss. How I got into using not using stop loss is because when I did live trading by myself, I didn't even know what a stop loss was. That was the biggest thing. I didn't know nothing about trading, even when I was in iMarkets Live. So I'm just being honest. I'm just being flat out honest. I don't know what a stop loss was. I just let it ride. That's it. And whether I lose money or not, I learned more from losing. I'll tell you that right now. I learned a lot from losing money. I lost more than 9,000 in the beginning. Within 2 months, I lost more than 9,000. I'm talking about deposit money. I'm not talking about profit. I'm talking about deposits. Right? If you took 350 to 26,000, and I actually did withdrew the 9. I only put like less than $1,000 in traders weight because I kept taking their credit. So I put like 350, took their credit, went up to 700, and then so it basically was like taking 700 into 26,000. But realistically, I only put 350 in, and I actually got to accrue all my deposit money back. It was like 970, and so technically, did I really lose money? No, not from Trader's Way, but I mean, with all the money that I put in from different brokers, it's totally different. Especially in the first 3 months, I lost a lot. So when you're losing that much, then you have to look back and say, okay, where are you losing? Right? I lost a lot more money on Fridays than any other day. I lost more money on non-farm on all the high impact news because I didn't know how to trade high impact news. By summer, things just started clicking in, and that's how I got really good at trading high impact news. I traded and stared at every single high impact news I could last year, and you have to like really, really, get down and look at news articles, what the financial analyst is saying. I don't care what they say. I go the opposite way, what they say anyways. I remember following what they say, right? They like someone on FX3 is saying, oh, you know what? I think the, I think non-farm payroll is going to be positive. Positive, right? Those say it's going to be positive. Well, they've actually predicted it was good. That was good. It was positive. Everything was positive for NFP, but the dollar still dropped after NFP. A lot of people get confused on that. The dollar was already priced in on buying, right? From Thursday night, kept pushing all the way up through London, and then when New York came by, it was already priced in so much that spike wasn't a major spike. When I'm talking about spikes, I'm talking about like major spikes, major spikes. Like CAD news, that's a no joke. CAD news is no joke. By far, CAD news is the Canadian red news, high impact news, by far the best high impact news to actually get those spikes, to be honest. We got some CAD news coming up for this week anyways. We got the RBA coming out in like, I don't know, when's RBA coming out? Just checking it out. I'm just checking. "41 minutes. 41 minutes, you got RBA coming out, like right here. 41 minutes, guys. I'm actually planning on buying. Do not take my signal. I like I said, I actually plan on buying Australia because I expect Australia to break the 77 price for this week. And most important thing is that, you know, when you anticipate the news events, you get to see the anticipation before the news hits anyways. Your main focus is to focus on the outcome of high impact news, not on what everybody's doing. If you focus on what everybody's doing on high impact news, you're going to lose more money. Let's be honest with you. Everyone thinks they're going to buy it. Why the hell would you even follow them? Do they even know what they're talking about if they're going to buy it? No, they're just following what everybody else is doing. You don't want to do that. You have to do your own research, read up on the Forex news, stay on fxstreet.com news, investing.com Forex news. What else? Daily FX, marketpost.com. I mean, I'm giving you some other sites too. Forex Factory. You get to see everybody's opinion on, like, the professional's opinion, right? That's the biggest thing you want to look for. And when you go against their opinion, I'm telling you, 80%. I have this. I'm just be realistic here. 80 to 90% of the time, they're wrong. They just get paid to say their opinion. Let's be honest about that. A lot of people say, well, they're like the chief financial analyst for their for this website. I think what they say is right because they know about economics. I don't care if they're an economics major. I'm not an economics major, you know, but if you actually do your research and read up on it, you get good at trading high impact news, and you can make a lot of money off of high impact news. You can flip an account trading high impact news. You really can. It's a massive breakout, massive spikes, I'm telling you. And then get back on the retracement. Get out and then get back on the retracement. That's what I used to do. And so when you focus, you know, when you have the mindset, you can focus on this. If you don't have the mindset for this, then you should not even bother looking at this. I'll just be honest. People see the money, but people don't have the mentality behind it, and people lack the work ethic when it comes to actually learning to trade. To be honest, I can't hand you my brain. I can't hand you the full skill sets of my trading skills. It doesn't work like that. Never. The most important thing is the mindset. I can't. That's flat. That's the most important thing. I even have it highlighted. This will test your limits on engaging mental focus and adaptability to all four Forex sessions markets and staring at the charts all day and night. That's what I did when I was flipping an account. I didn't even know when I want to sleep, to be honest. And this last thing is very powerful, and I'll explain this. The power of flipping is taking a small investment into the biggest account or highest return on investment. That is huge because when people here, I'll put in a perfect example. When people flip homes, if people can flip homes, why can't we flip everything else, right? We can, right? We can flip an investment. Yes, you can. Flipping home is an investment. Flipping a house is an investment. I'm not a house guru. I'm not a real estate agent. But when you're flipping a house, are you trying to buy the most expensive house on the block? Probably not. Are you trying to invest more than what you cannot afford to make the return on investment? Obviously not. It's the same thing. It's the same thing for Forex. People think, oh, I need to put 10K so I can take it to 100K. By all means, go ahead. If you have 10K to take it to 100K, good luck with that. I'm not all about putting 10K to make 100K, to be honest. I'm just being flat out honest. When you can put $100 and take it to 1,000 in one day, or even just 1,000 in 1 week, that's still flipping. When you can take 250 to 3,000 in 1 week, when you can take 600 to 5,000, anything less than 1,000, you know, that is really awesome because the smaller the number and it gets compounded to a higher number, that's a real flip, right? That's a real flipping story. And a lot of people get mistaken by looking outside of flipping. and I mean, I'm gonna stress this bullet point here. Not every day is a flipping day to make a lot of money. Not right now. Tokyo sessions right now, not even worth trying to flip nothing. If you were in within the first hour of Tokyo, yeah, you could have scalped that first hour of Tokyo, and then focus on the RBA coming out in 30 minutes, which I plan on buying for the RBA, buying Australia. So that's it. That's it. I mean, prices are just gonna be more in consolidation phases in a consolidation period, especially in the summer. You gotta catch that summer trend. Like for this month, I'll be honest right now. You gotta catch the summer trend, the 90-day summer trend from June all the way to end of August. Very important. A lot of people want to do scalping. Be my guest. There will be great days to scalp, but to catch that summer trend is really awesome. Let's be honest. If you look at the euro, if you look at gold, you look at the pound, if you look at Australia, you look at New Zealand, they were pushing up the whole summer. USD Canadian dollar was the one that dropped the most because Canada runs oil. So that's another tip right there. I talk about the same thing. And oil is a really great commodity to trade during summertime, to be honest about that too, besides gold. And so you get to here's the thing. Identify those trends and patterns on Sunday and Monday. That way you are not falling behind on a weekly and daily trend on stacking long term for each upcoming session. So those that actually want to take it to a whole new level for flipping an account, stack on Sunday, stack on Monday, stack on Tuesday, stack on Wednesday. That's how I did it for the 250 to 3,400. That's how I did it for the 692 to 5,000 for the month of February. The month of February, I'm going to say it again, is the best month to flip an account. Until tax season. When is tax season over? Tax season is over on April 15th. Guess what? You still got time to flip an account all the way till April. February and March is by far the best 2 months to get the most money. I feel like you can make your own salary for those 2 months and then call it a year and wait till next year. I'm just being honest. I don't try and focus on flipping an account every single month. That's just way too much. And yeah, it's cool you can flip an account every month, but you're going to get yourself, like I said, you don't want to burn yourself in this industry. And you don't want to overload too much of your time and energy just staring at charts all day. I'm just being honest right now. The lifestyle, this is the last thing I'll talk about. The lifestyle of Forex or stocks or crypto is having that life to where you don't really need a vacation, right? People say they need a vacation from their job because they're tired of working at their job for X amount of days, right? I love what I do. I really do. I love what I do. I'm home. I get to be at home, right? I'm working from home. I don't have to drive 2 hours to work. I don't have to get up and go work at a company job, right? That's the lifestyle, right? I mean, I'm all about staring at the charts, but eventually you don't want to be the one ending up staring at the charts forever, right? You're going to end up being like a chart slave. I'll just be honest, right? Do you really want to stare at charts 8 to 10 hours a day? No. But when you really get good at it, then you don't really have to focus staring at the charts forever, right? And so if you really want to create that lifestyle, it's okay to sacrifice a full year or 2 years. Anything more than 3 years, like staring at the charts for that long, for 3 years straight, for 8 to 10 hours a day, you really have to figure out what's wrong with your mindset or your discipline of trading. Then it has nothing to do with trading anymore. It has everything to do with the way you think about trading. It has everything to do with your emotions, your mentality, and your attitude. Let's be honest right now. Most people are really great at trading, but they suck at managing money or get or are just too stressful, get too depressed or stressed out, whatever it is, right? And I mean, you're gonna have to define your balance in trading, to be honest. If you don't have that balance in trading, you can end up being a robot, and you don't want to be a robot either. And so, I mean, this is probably more than enough. Enough. I mean, I didn't expect to talk for this long, but I mean, you guys know that I like to talk and give all this stuff for you guys. And so, and you know, the Telegram group is free. The PowerPoint is delivered. If you really want, I can email it to you. I mean, it's just another reading material. And like I said, you have to apply what you read. If you don't apply the actions behind what you read or what you learn, then you're not really learning nothing. I don't care which courses you take. I don't care where you're going on another education course. It doesn't matter. I don't care. It doesn't matter. It could be college or it could be another Forex course. It doesn't matter. It doesn't matter. It don't matter how much you pay for an education. Just be flat out honest. Someone can take, like I said, someone can take free education and like really self-develop themselves and become a lot better than who they are currently. And so, I mean, I feel like you. Okay, I'm just gonna leave it the way it is. I just watched this, and any questions, feel free to comment the video. And what is it? Okay, 30 minutes for RBA. Okay.